The top business stories live from the Sky News City studio. The UK emerges from recession with stronger than expected growth of 0.6% for the first 3 months of the year. Business plays its part with production including manufacturing, the strongest growing sector. I'll be joined by Sir Martin Sorrell as we look at what might come next for the UK economy. Good afternoon, this is Business Live with me, Ian King. The UK has emerged from the shallow recession it entered in the second half of last year, with the economy growing more strongly than expected during the first 3 months of 2024. The Office for National Statistics said the UK GDP grew by 0.6% during the 3 months to the end of March. That was appreciably better than the 0.4% that had been expected in the city and that had been forecast by the Bank of England only yesterday. It represented the strongest growth for the UK economy since the final 3 months of 2021. The strongest growing sector in the economy was production, including manufacturing, where activity expanded by 0.8%. Services, the biggest part of the economy, expanded by 0.7%. But activity in the construction sector fell by 0.9%. Well, earlier I spoke to Siobhan Haviland from the British Chambers of Commerce.
The figures we saw this morning were absolutely welcome, that's for sure. And, we did our QES survey or economic survey at the end of last year. If you remember, we saw an uptick in confidence from business and that has remained buoyant. So good to see us coming out of a technical recession. But I think probably what businesses would say and what we would say is we are cautiously optimistic about, the economy going forward.
Well, joining me now is Sanjay Raja, Chief UK Economist at Deutsche Bank. Sanjay, great to see you this afternoon. What were the surprises for you in the figures?
Happy Friday, Ian. And what good news to jump into the weekend with. 0.6%, as you mentioned, it was well above what we were expecting. We were expecting something closer to 0.4%. The two biggest surprises really coming with this print, this wasn't a household consumption recovery. This was really driven by two or three things. One, government consumption came in a little bit better than we were expecting. Business investment, close to 1% growth on the quarter. So that was a lot stronger than we were expecting. We were thinking business investment would be about flat to start the year. So that's some good news. Households are replenishing the capital stocks coming into 2024. And of course, the really big thing that really drove this print higher was trade. We're seeing some rebalancing in trade. And for the first time, we're seeing a bit more of a rebalancing in trade since the pandemic. So we've had multiple shocks since the pandemic. We've had Brexit. And for the first time, we're starting to see a bit more life in the trade sector. So exports and imports both falling, but imports falling by a little bit more than exports, pushing GDP a little bit higher than we were expecting. So some good news, some encouraging news. And as your previous person was mentioning, cautiously optimistic on the UK economy.
Sanjay, you've raised your forecast for GDP growth this year from 0.5 to 0.8%. What are the risks to that forecast?
At this stage, we think it's broadly balanced. So if we look at the survey data, we look at the BCC survey that you mentioned just at the start of the program, the PMI, the CBI surveys, all of these surveys have been pretty positive. So we're seeing the fruits of that optimism that we talked about earlier in this year. That's coming to fruition. So we think that there's actual momentum building in the economy. If you look, yes, there are headwinds. We have to be realistic about the headwinds that we're seeing in the economy, but we also need to be cognizant of the fact that we're seeing tailwinds. We're seeing real disposable incomes growth. That's one big element to it. We're seeing some fiscal greasing. We've had 2 consecutive big tax cuts to start the year with, first in January, second in April. And we may be on the precipice of rate cuts. And then we may see the Bank of England cut rates as early as June, potentially as late as August. But nevertheless, we are starting to see some tailwinds build in the economy, some encouraging signs that momentum can sustain itself. So we're expecting growth to continue at about 0.3, 0.4% through the year, taking us to about 0.8%. Now, consensus estimates, Ian, are roughly about half of that. But I do think we'll start to see forecasters pick up some of their growth estimates, their forecasts, through the next week or two.
Now, stronger growth in theory means a stronger tax take. Does this appreciably improve the fiscal position for the Chancellor? Could it equip him for more giveaways later in the year?
Well, two things about that. So yes, real GDP was stronger than expected. But if you look at the cash size of the economy, nominal GDP, that was just a touch lower than what the OBR was expecting. So that's the most important bit when working out the cash receipts that the Chancellor takes in. So that was slightly more disappointing, I think, if you're the Chancellor looking at a potential second fiscal event later this year. But more importantly, Ian, is where the market is in terms of rate expectations. So yes, we had some dovish news from the Bank of England on Thursday. So that's great news for households, great news for businesses. And yes, on the margins, good news for the Chancellor. But if you go back to that spring budget, the one that he set out on the 6th of March, now the curve, the market rate expectation curve that the OBR used, the conditioning assumptions that it used, was far more encouraging than the one that they used today. So interest rates still, even though they've come down a touch since yesterday, about 20 basis points above the curve that they used about a month or two ago. So from that perspective, it feels like there's not very much ammunition for this Chancellor to go and do a second big fiscal event. If anything, it may be a modest, a very marginal fiscal event with very limited fiscal giveaways and potentially skewed to giveaways coming not this fiscal year, but in the next fiscal year.
You touched on the Bank of England just now. Is there a case for saying that actually this is a stronger than expected rebound in activity? The bank would be forgiven for sitting on its hands for longer?
I think that's part of the concerns that we will have, that we will see from some members of the policy committee. And of course, at the end of the day, Ian, as you know, this is quite a lot, it takes a lot of judgment to come to this assessment. But ultimately for the Bank of England, it's really coming to an assessment about where demand is versus where supply is, i.e. where is that output gap? Because ultimately that's what determines inflation. Now, the Bank of England has been telling us for some time now when we've seen growth miss to the downside that it's a function of weaker supply. I suspect what we'll start to see are more rumblings about a more positive supply side story, i.e. this growth rebound that we've seen in Q1 doesn't really move the dial in terms of worrying inflationary pressures or generating those kind of excess inflationary pressures, especially as we're just about to get headline CPI right down to target in the second quarter of this year. So on the margins, maybe it changes the quantum of how much the Bank of England dials down its restrictive policy. But when it comes to the start date, we're a bit more ambiguous and more ambivalent in terms of that starting point. We still think June feels very live. We've heard from the governor, we've heard from some of the MPC members. We think there's enough momentum to get that first rate cut in June of this year.
OK, Sanjay, thanks for joining me today. It's much appreciated.
Thanks, Ian.
Now, few people are better placed to discuss the macroeconomic picture than the advertising kingpin Sir Martin Sorrell. Shares of his digital advertising and marketing services company, S4 Capital, whose customers include Google, Meta and BMW, have risen by more than 14% today after the company reiterated full-year sales targets despite a drop in quarterly revenues. And I'm very pleased to say Sir Martin joins me now from Chicago. Martin, good to see you this afternoon. Obviously, the UK is not your biggest market, but what is your perspective on the GDP figures?
Well, it's a little bit better news. Whether it's enough to appease the electorate, Ian, is another question, I guess. We'll have to see what happens. I guess it'll be in November. Looks like we'll probably have another budget before the election, and maybe the election after the US election. The US election is early in November, as you know, and maybe later in November we'll get the UK one. But I'm not sure that the growth that we're seeing in the UK economy is enough to swing voters' minds, but it's certainly a slightly better picture than we thought.
What is the picture in the UK like compared with the other countries in which you do business? I mean, you have a good global perspective on these things.
Well, I think, Ian, if you looked at the world, and I'm in Chicago with a group of business people now from mainly US, but global as well. And I think the hotspots in terms of growth are North and South America, the Middle East, despite the sad stuff going on in the Middle East, and Asia, China. A bit of a health warning on China. It's interesting. The Americans believe that the relationships with China are better than they have been for some time. It's twin track. I mean, political is sort of cold and economic is warm because both countries depend on one another. And the two economies together, the US is about 28 trillion, China is about 18. So they're about almost half the world's economy, about 45% of the world's economy between them. So Asia, China in the forefront. But if you're big in China, do you want to take on the Taiwan risk? And then obviously India is benefiting from that, and Modi is driving. India probably will be, almost definitely be re-elected with the BJP. Indonesia, Thailand, the Philippines, Singapore, Malaysia. These are the Vietnam. These are the countries, New Asia, as I put it, that are growing. Africa is probably too volatile. I think we have more wars in Africa than we've had at any time previously, or conflicts. And last but not least, of course, Europe. And the prospects for France, Germany, Italy, Spain, and the UK, I think, are less rosy from a growth point of view. And most of our clients, to be blunt, look at Europe from a cost point of view rather than the revenue point of view. So it is varied, and I think those are the growth spots. And then the other thing that's driving investment and revenue and indeed efficiency is the growth of technology, but particularly AI. It's not just AI, it's quantum computing, it's blockchain, it's the metaverse, the much maligned metaverse, which I think is now underhyped. We're seeing big advances in medicine and sports and entertainment and music and training and work from home and work from anywhere. But AI, of course, there's a huge investment being made in capacity. And I was just reading some of you before we came on air, some of the words that Elon Musk has been talking about from the Milken conference and elsewhere, and urging caution in relation to AI, which is fair. But in our industry, we are seeing a significant impact of AI on visualization and copywriting. That's the production of ads, which are taking far less time and getting to market much quicker. And the second area is personalization of advertising, sort of Netflix personalized advertising, but on steroids. And clients, we're seeing a lot of activity by clients around building content platforms with all their content assets as a part of it, driven by big creative ideas. So AI is starting to have an impact, some positive, some negative. There'll be some jobs that are generated by it and some that are lost by it. But generally, we are seeing increased attention and activity around that part of our business.
OK, Martin, while we have you, I'd love to get your perspective on what's been going on at Apple over the last 48 hours. I mean, a very rare misstep. They've had to apologise for this new iPad advertisement they've put out. What did you make of that?
Well, listen, a journalist called me about it, and it's difficult for me to comment because we have a relationship there. So obviously it's subjective. But I've got to say, look, the fuss that's been made about it, I think, it is a little bit too much. Apple is an immensely successful company, a $3 trillion bigger than many countries, and the work and the quality behind their products, design, advertising, communications are storied and are approved by all. The thing that it was getting at, which is that technology is changing the way that we think about things, not just technologically, but creatively too, is well taken. And technology is having a very significant impact on the way that creative is implemented. The criticism reminds me of the sort of attitude that people in our industry had to the importance of data. Data is often said by some in our industry to destroy creativity. It doesn't destroy creativity, it improves it. And technology will improve it too. I mean, there are dangers with technologies, the dangers with social media, the dangers with AI, but we mustn't lose sight of the fact that it does open up to many people opportunities of improving the way they do things. The ad may have gone a little bit too far, and as you say, Apple have apologized for it, but I don't think they have to apologize for what they've done over many years and the success of the company under Steve Jobs and now Tim Cook, and I'm sure in future years to come.
All right, Martin, always good to talk to you. Thanks very much for spending the time today. Thank you. Take care.
Thank you. Thank you. Thanks.
Some other business news stories for you now. An international airlines group, the parent company of British Airways and Aer Lingus, said this morning it was well positioned for the summer after reporting better than expected profits for the first 3 months of 2024. IAG, which also owns Iberia and Vueling, achieved an operating profit of €68 million for the first 3 months of the year, up from €9 million in the same period last year. Luis Gallego, IAG's chief executive, said the early timing of Easter had been supportive, but it also cited lower fuel prices and the benefits to investments to improve punctuality and customer service. He said the group had increased capacity by 9% in Europe during the period, in particular at Aer Lingus, British Airways and Iberia. Car maker Jaguar Land Rover has recorded its highest ever annual sales and its biggest profit in nearly a decade. Sales in the year to the end of March came in at £29 billion. That was up 27% on the same period a year earlier, driven by record sales of its Range Rover model. Pre-tax profits came in at £2.2 billion, which was the highest since 2015. The government had conditionally waved through the proposed merger of Vodafone and Three's UK operations after launching a review of the deal on national security grounds. However, should the merger go ahead, the pair will have to set up a national security committee to oversee sensitive work and regularly update ministers. And that is because Three is owned by Hong Kong-based CK Hutchison. Well, the merger is separately being investigated by the Competition and Markets Authority. Shares of Vodafone have risen by 2%. Still to come here on Business Live, we'll have a look at how markets are going into the weekend. Stay with us.
Independent, United Kingdom.
These last few years have seen some huge stories. And these stories have been driven by politics, by politicians, the people in power.
You must stay at home.
And it's my job to figure out how these decisions made by politicians impact all of us in our everyday lives.
This is the worst thing I've ever been through in my life.
People turn up here with their child stuff in a black sack and just say, I don't want to.
And that is what it is. It's first-class poverty.
Is this an example of the welfare state failing?
We take you to the heart of the stories that shape our world.
These are stories that affect us all. Millions of children are now having to catch up. Some stories have changed all of our lives. Because like the residents, the staff are being infected. Politicians, they make decisions all of the time, and it's our job to hold them to account. I wonder if you will take this opportunity to apologise to those families. But in the end, the real power doesn't actually lie with the politicians. The real power lies with the people. I'm Nick Martin. I'm the People and Politics correspondent at Sky News.
I'm Greg Milam and I'm Sky's Chief North of England correspondent. We aim to be the best and most trusted place for news.
Onto the markets now. The better-than-expected GDP figures were greeted with very little movement on either the gilt market or the foreign exchange market. This is the current picture. You can see sterling more or less unchanged against the dollar. It's up 0.1% against the euro. On the equity markets, this is how Europe has finished today, all in positive territory. The main indices, notice the DAX in the top left-hand corner. That's hit a new all-time high today. Here in London, after 5 consecutive record closing highs, the FTSE 100 has done it again. That's 6 in a row now, up nearly 2/3 in a broad-based rally. The leading blue-chip gainer in percentage terms this afternoon is the engineer Spirax Sarco. That's up nearly 3%, while Anglo-American is up 1.5% after the FT reported that its South African shareholders are open to a possible takeover, while would-be Glencore is up 2.5% on that news. Not too many blue-chip fallers to mention this afternoon. However, Rightmove is off 5.5%. That was a trading update this morning that didn't go down terribly well. Outside the FTSE 100, well, housing and consumer-facing stocks are all higher on hopes of an impending Bank of England rate cut. House builder Crest Nicholson is up 3.5%, and Marshalls, the paving slab supplier, up by nearly 6%. Both of those benefiting from broker comment. Another notable gainer in that field as well to mention is Currys. That's ahead by some 4% just now. Over on Wall Street, well, all the main indices are higher this afternoon. I normally prefer to talk about the S&P 500 because it's the most important US index. But the Dow, which is obviously pretty well known, that is closing in on 40,000, and that is currently ahead for the 8th consecutive session. Talking points over on the Street of Dreams today include the biotech firm Novavax. That's up 6.5% on a licensing deal for COVID vaccines with Sanofi of France. As for the oil price, well, that is a bit drifty this afternoon, but it's still on course for a second weekly gain. In 3, a barrel of Brent crude will currently set you back $83.57 a barrel. That's off a little over 1/3%. Well, joining me this afternoon is Luke Hyde-Smith. He's co-head of multi-asset strategies at Waverton Investment Management. Luke, good to see you this afternoon. From an investor's perspective, how are you treating the GDP numbers today?
Well, I think it's very interesting to note that the 0.6% was above all economists' expectations. I think it's a little early to get too excited. Year-on-year basis, only looking at a 0.2% year-on-year economic growth number. What I do think is interesting, actually, is this beat for the UK relates to a pretty substantial miss for the US, coming in well under expectations for Q1 at 1.6. So, is there potential for the UK to surprise positively and perhaps the US to disappoint a little bit over the remainder of this year from an economic growth standpoint?
We were talking earlier on to Sanjay Raja about Deutsche, what it means potentially for the Bank of England. He didn't think it would move the needle terribly. Is that your view?
Well, yeah, obviously MPC met yesterday. We had Andrew Bailey's conference to follow. I think we could describe it as a dovish hold. Deputy Governor Dave Ramsden also moving on to the cut standing, so 7 voting for a hold and 2 voting for a cut. One of the things we've been talking to clients about actually is the upcoming April data point coming out 22nd of May. This is actually when we get the adjustment of the energy, regulated energy price coming out. So, there's the possibility of an inflation number coming in around 2. And I think that does open up the possibility of some rate cuts if we can get some corresponding data also supporting that lower inflationary number.
There are some huge tailwinds for the UK economy now. I mean, we've got inflation coming down, potentially rate cuts. We've had 2 cuts in national insurance over the last 4 months. There's a big dose of stimulus, biggest ever rise in the national living wage. There's a lot of stimulus here for the consumer.
Yeah, I mean, it does look, you can paint a positive picture in terms of, spending, positive real wages, and dare I say it, interest rate cuts spurring a little bit of animal spirits, if you like, back into both the consumer and the corporate sector. So, as I said, we're dealing with low numbers from a growth standpoint, 0.2% annualized basis. But I think there's room to surprise positively from very low expectations for the UK and the UK consumer.
Well, you mentioned animal spirits. Obviously, one way that manifests itself is in M&A, and we've had a big dose of that lately in the UK. Anglos being the real talking point in the market. Yeah,
a big bid coming in from BHP for Anglos. I think that really sort of highlights 2 things. I think it highlights value in the UK market, which is clearly evident with the number of bids we're seeing. But I think it also points to a very robust outlook for the copper price. Really, this bid is all about getting hold of Anglo's copper assets, and I think it's clear that it's maybe easier to buy cheaper assets from a listed company than it is to think about the capex and the long-term financial input that is required to actually build and gain the demand for your copper production.
Now, we have results out this morning from IAG. Again, very strong numbers indeed.
Yeah, indeed. I think this speaks to the point that low expectations in the market. Shares responded positively. I think it also responds to strong consumer, strong corporate. As we know, AIG very, very reliant on the Atlantic route. That has shown strong momentum and strong growth. And I think the other thing, the company's got its house in order from a debt perspective. That is surprised positively, and it gives the balance sheet and the company a bit of flexibility in terms of future growth potential.
Yeah, I mean, is there much more to come for them? I mean, they seem to be doing much better than the likes of Lufthansa and Air France.
I think there's potential there, and I think it's sort of undervalued versus expectations. Everybody's looked at Ryanair, and that's been a fantastic story in the airline space. But I think it's worth a second look at AIG.
OK, Luke, got to leave it there. Great to see you this afternoon.
Thank you very much.
Well, that's it from me. Hope you enjoyed our GDP specials today. I'm back again on Monday with our next edition. That will be at 11:30, of course. Do hope you can join me for that. Coming up next, it's Matt Barbett with the News Hour. Thanks for joining me this afternoon. Have a great weekend. Cheerio.